Welcome to Spiedel's California Minute. I'm your host, Catherine Zidane. This week, we're covering some implementation issues concerning the new digital products and services tax. Get an update on everything that happened during the year to be prepared for tax season at Spiedel's Federal and California Tax Update webinar. You can see a list of dates and topics at spiedel.com under webinars. California will begin taxing sales of digital products and services effective January 1st, 2027. Under this new law, most transactions involving sales of non-customized software and software as a service, for example, tax software, Canopy, Zoom, etc., will be subject to tax, especially those involving business-to-business transactions. Items such as digital assets, music downloads, ebooks, and video games, as well as digital infrastructure, will be exempt. Currently, there is no exemption for purchases by state or local agencies. The CDTFA held its first interested parties meeting on the new law in late July, and will cover a summary of some of the key insights from the meeting. The CDTFA aims to have regulations adopted by January 1st, 2027, the date the statute goes into effect. Taxpayers that make purchases prior to January 1st, 2027 will not be subject to the tax. Both the payment and the right to use the product and/or service have to occur prior to 2027 to avoid the tax. Licensing payments are treated as continual sales, so any payments made for these products after 2026 will be subject to sales and use taxes. The CDTFA indicated that they will not penalize taxpayers for prepayments made prior to January 1st, 2027, but will have to wait for the final regulatory language. Sales of custom computer software remain exempt from the tax. This includes modifications to existing pre-written software, but the exemption only applies to the portion of the sale that relates to the modification services. The regulations determine how much customization is required to qualify for the custom software exemption. A program prepared to the special order of the customer qualifies as a custom program, even though it may incorporate pre-existing routines, utilities, or similar program components. As the law is written, purchases that are not made in person will generally be sourced to the purchaser's billing address. This sourcing methodology is a huge red flag for purchasers who purchase software or software as a service for use in multiple locations, because the law does not allow for the sale to be sourced to multiple points of use. However, the law does exempt the sale, storage, use, or other consumption of digital products purchased solely for use outside California or in interstate or foreign commerce. In the July 2026 Interested Parties meeting, the CDTFA indicated that they will look to the location of the ultimate users, but we'll have to wait and see how the CDTFA addresses this issue during the regulatory process. Unless a purchaser obtains a waiver from the CDTFA, the responsibility to remit sales or use tax to the CDTFA shifts from the retailer of a digital product transferred electronically or accessed remotely to the purchaser if the gross receipts that the retailer receives from the purchaser exceed $5 million in aggregate in the current year. Sellers and purchasers will have to establish systems now to be ready by 2027 to track when they meet the $5 million threshold. Many large software companies argue that it makes no sense to have two different sets of sourcing rules, one for $5 million and below, and one for above $5 million, but we'll have to see if the CDTFA provides some type of relief. We'll provide a more detailed discussion of this issue in the upcoming issue of Spiedel's California Tax Letter. You can get details on this monthly publication and download a sample at spiedel.com under Publications. That's all for this week. Join us next time for another episode of Spiedel's California Minute.